you're joining me live today from Houston, Texas. The weather's about 109 degrees today, and it's pretty hot. So I'm glad to be inside today here with you, filming a class about operational insights that we are going to be able to glean from the profit and loss statement. The numbers from the top to the middle to the bottom, they're all important, and they all tell us something very valuable. And so if you are a person who normally just looks right at the bottom line, I'm going to teach you how to glean more operational insights from the top and not the bottom. And that's called ops margin. So tips and tricks for ops margin is what we're here to learn about today. Thanks very much. I hope you enjoy. Okay, so let's get to it. Tips and tricks that we're going to learn today is number one, what ops margin is, what it means, and how important it is. We're also going to talk about which accounting method is best to look at in terms of operational performance and understanding performance and performance metrics. We're also going to talk about the importance of looking at your profit and loss statement based on closed periods and not open periods. And then we will get to the part where we get to learn how to look at ops margin on the go and in the field and making better and more profitable decisions on the go. And at the end of this class, we would talk about what are the difference between good and bad margins. So today's class, it's important for any business, not industry specific, and what we're talking about is operational performance. How to understand operational performance and what the operational performance means to you. So if you are a business owner or you advise business owners, you work in a business, you help business owners, or you help the management of a business, this class will arm you with the tools and the techniques that you need to learn information from the profit and loss statement that will help you make more profitable decisions. And so every business has a passion. Passion is what started their journey, and the journey drives the passion. So what is the key to success? Every business, they all have basic elements that are the same. And so when you look at one business versus another, what makes one business more successful over the other? Well, lots of times it's relationships. Sometimes it's cash flow. Sometimes it's opportunity, talent, and a little bit of luck. But since business owners enjoy the kind of lifestyle that an employee doesn't enjoy, meaning he works when he wakes up, he works while he's sleeping, he works every moment of the day in his mind, on a piece of paper, in the car. It's an all the time type of job. And so why doesn't everybody have a small business? You have to ask the question. So one person we know very well, Thomas Edison, said it best, I think. Opportunities are missed by most people because opportunity is usually dressed up in overalls and it looks like work. Well, it is a lot of work. So let's take our eyes now onto ops margin and let's let the profit and loss statement do a little bit of the work for us. So what is ops margin? I'm only talking about the top part of the profit and loss statement. The section that begins with income or sales, and then it subtracts out cost of sales or cost of goods sold, and then we're left with gross profit or gross margin. It means the same thing. But this is the operational metrics part of your business. It drives how you earn your sales. It's what you do for a living. It's what you sell. It's either what you sell in combination with goods and services, or it's a service you provide. Either way, the top section of your profit and loss statement has the most wealth of knowledge and information for you as opposed to the bottom. The bottom part of your statement is very important also, yes. But what drives sales and what drives your margin, that part of what you need to know as a business owner and how to make more profitable decisions is largely focused in the top part. So, as I said, we're talking about sales minus cost of goods sold and ops margin. Profit and loss. Here's what a typical profit and loss statement looks like for a landscaping company. This one is Cactus Jack, and he has workers that do the work, and then he also buys plants and resells them to his customers. He doesn't grow the plants himself. He goes to the nursery, he buys the plants, he marks up the plants, his guys put the plants in the ground, and then as a bundle, Cactus Jack makes his sales. And so what we can see from this example is that sales, the top margin, plus any customer discounts he might be giving, he has a large top line of $7.8 million. That's a lot of money for a landscape company. He does very well at the top line. But does he do very well at the bottom line? That's yet to be seen. So let's look at the top line. We talked about this. It's sales minus cost of goods sold is gross profit or gross margin. And to understand the basics of his operation in terms of operational performance, this is where we calculate our first calculation, and after he subtracts out his cost of goods sold, he's left with 1.9 million. Is that good? Quite possibly it's good. If he's at 25%, which is 1.921 divided by 7.8, 25% left over after the cost of sales. If he has at least 25% left over, he is likely to be able to pay for everything below the line, which might be his rent. It might be his administrative office overhead. It might be his computer software that he uses for bookkeeping. It might also be his insurance or health insurance. Things like that go below the line, and even including your bank service charges. The difference between the top line and the bottom line is the elements in the top section drive your sales. Meaning, if you don't have this part, you don't have this part. But you will always have overhead, right? Overhead will continue whether you have a job today, 10 jobs tomorrow, or no jobs for a few days. This part is usually administrative expenses and general expenses that you have ongoing as a part of just having a business. And so these things, they're important because you have to have enough cash flow to pay for these things, yes. But this is where we focus, because if we don't have at least 25% left over after we subtract out our cost of sales, we are not likely to have enough money to pay for the bottom part. And if we don't have enough money to pay for the bottom part, guess what? Our bottom line is negative. So this is where we start with our understanding of ops and ops margin and how important this is. 25% I'm using is a benchmark. It may not be 25% for all industries, but on the whole, and by and large, I can tell you from experience in multiple industries that I've worked in, if I have at least 25% left over after I pay for my cost and my sales and the people that were paid to do the work, I'm usually going to be able to have a green bottom line at the end of this.